Shares are securities that give ownership of a share of the ownership and profits of a company. The stock market is the place where shares are bought and sold. There are 60 largest stock markets in the world, 16 of which have a market capitalization of over $1 trillion. Both large players, such as banks, mutual funds, and small investors trade in this market. The stock market operates on the principle of supply and demand and provides opportunities for long-term investors and day traders. The U.S. stock market consists of well-known exchanges such as the Nasdaq stock market and the New York Stock Exchange. They have gained a reputation for trading reliable quality stocks and provide access to some of the most traded stocks in companies such as Apple, Amazon, Bank of America, General Electric, ExxonMobil, and Johnson & Johnson. What is a stock exchange? A stock exchange is an online platform where you can trade securities, stocks, bonds, investment units, and more complex instruments such as options and futures. The exchange makes sure that all parties fulfill their obligations and transactions pass quickly and reliably. Only papers of trusted companies are allowed to trade. You will not find obvious scammers there. And since there are many sellers and buyers on the exchange, transactions are carried out at a fair market price. To enter the exchange, you will need a professional intermediary, a broker or trustee. Brokers make trades on your behalf. At the same time, you yourself decide which securities to buy, sell, and at what point to do it. The manager makes such decisions without you, but does everything strictly according to the strategy agreed with you in advance. It is possible to buy and sell certain types of securities without going through the stock exchange. This way of trading is called over-the-counter. The organizers of such transactions are most often the same brokers and trustees. But over-the-counter trading is associated with increased risks. The value of securities is often far from the market value. In addition, the exchange does not check the companies that issue them. So it is difficult even for experienced investors to assess the likelihood of profit or loss. It is even more dangerous to do without the help of licensed intermediaries. There are high risks of stumbling upon outright scammers and losing money. Where do securities come from? They are issued by issuers, companies, the state or its individual regions, in order to attract funding. Often, issuers simply want to borrow money from investors at interest. And for this they issue bonds, in fact, IOUs. What are bonds? What income they can bring and what risks are associated with their purchase? Read in the text bonds, what are they and how to make money on them. Companies can also offer investors to become co-owners of their business. Issuers then issue shares that entitle buyers to a share of the company's profits and, in certain cases, to participate in its management. Holders of the company's bonds on its server and is updating it. This register stores information about who owns and how many securities. Such registries help issuers communicate important news to securities holders, accrue dividends on shares and coupons on bonds. The creators of the company can keep some of the shares or bonds and continue to keep them with the registrar. But exchange trading is possible only through a system of depositories that record information about all transactions on exchanges. This system includes the central depository of the country, the depositories of exchanges, as well as the depositories of all brokers and trustees. If you are going to buy and sell securities on the stock exchange, you need to open a depot account with one of these depositories. But usually people open an account in the depository of their broker or manager, so as not to pay extra commissions for transferring assets between their account and the intermediary. Your depot account will reflect all the securities that you bought on the stock exchange, but they will be stored in the country's central depository. For the first sale of securities on the exchange, the company hires a broker and writes the securities to the account of the depository of this broker. Shares and bonds purchased on the stock exchange can be stored not only in the depository, but also with the registrar of the company that issued them. To do this, you need to open a personal account with a registrar and transfer securities to it from a depot account with a depository. Then your broker will not be able to access these securities, even if you allow him to use your other assets. And in the event of bankruptcy of a broker, you definitely will not lose those papers that will be kept by the registrar. This way of storing stocks and bonds is only suitable for securities that you are not going to sell in the near future. When you decide to sell them, you will need to transfer assets again from the registrar's account to the depository. in order to conduct transactions with foreign securities. Stock exchange depositories open accounts with international settlement depositories. At the same time, when you buy, for example, a share of an American company, in fact it will be stored in the U.S. Central Depository, who controls the order in the stock market and stock exchange. This is done by the regulator, a state organization that monitors the work of all professional participants in the stock market, brokers and managers, as well as registrars, depositories, and exchanges. Do not trust your money and assets to intermediaries who do not have a license. If your rights are violated by illegal immigrants, the regulator will not be able to protect you. In this case, you will only have to contact the police, the prosecutor's office, and the court. When you enter into an agreement with a foreign company, the Bank of Russia will not be able to help you in case of problems. To defend your interests, you will have to apply to a foreign regulator and law enforcement agencies of the country where the company is registered. I want to trade on the stock exchange. Where to begin? It is important to remember that investments in securities can always result in losses. Therefore, it is worth becoming an investor only if you have free funds and you are ready to risk them. Buying and selling securities is not a casino or a lottery, but a scrupulous calculation. An investor can conduct transactions on the stock exchange not only with his own assets. Quite often, brokers and forex dealers are ready to lend their clients securities and money for trading on the stock exchange at a certain percentage. A person will not receive them on the account and, accordingly, will not be able to withdraw from it, but he will have the opportunity to use them in transactions. The investor's own assets serve as collateral. They guarantee that he will be able to pay off his intermediary. Such a deposit is called margin, and the number that shows how many times the transaction amount will increase is called leverage. Therefore, transactions in which the client uses the assets of a broker or forex dealer are often called margin trading, or trading with leverage. And the margin transactions themselves are unsecured transactions. If the deal makes a profit, thanks to the leverage, it will increase significantly. But in case of failure, losses will also increase in the same proportion. Margin trading gives players a chance to earn not only on the growth, but also on the fall of the asset price. Suppose an investor assumes that the value of some of his securities will decline. He sells them and then buys them back, but cheaper, and makes a profit from the difference. Margin trading short allows you to earn by selling even those assets that are not in your portfolio. You borrow them from a broker and sell them. If these papers get cheaper, you later buy them at a lower price and return them to the broker, and keep the difference between the sale and purchase price. But if the price rises, then instead of profit you will receive losses. You still have to return the securities to the broker, but you will need to pay more for them. Please note that margin trading is not possible for all instruments. The list of assets that can be bought or sold with leverage is posted by brokers on their website or in the terminal. Margin trading short always involves a reverse trade. If you sell securities that you borrowed from a broker, in other words, open a position, then after a while you must buy them back and give them back, or close the position. When you trade long and buy a certain amount of leveraged securities, you are not obliged to sell them later. You can simply fund your account to get your money back to the broker. How is leverage determined? Leverage shows the ratio of the investor's own assets to the amount of the transaction, taking into account the money or securities provided on credit.